Have you ever heard of the silver squeeze? It was this massive movement that started online, where a huge group of retail investors decided to buy up physical silver and silver-related stocks all at once. The goal? To expose what they believed was a huge manipulation in the silver market by big banks and financial institutions. It all kicked off in early 2021, right on the heels of the GameStop saga. People were fired up, using platforms like Reddit, specifically the Wall Street Bets, and later the Wall Street Silver subreddits, to organize and spread the word. The core idea was pretty simple, but also incredibly ambitious. Proponents of the silver squeeze believed that the price of silver was being artificially suppressed. How? Through a massive number of paper silver contracts, things like futures and options that didn't have actual physical silver backing them up. They argued that for every ounce of real, physical silver, there were hundreds of paper claims. So, if enough people bought and took delivery of physical silver, it would create a shortage. This shortage would force those who had sold paper silver to cover their positions by buying real silver at much higher prices, causing a squeeze and sending the price of silver to the moon. The movement gained incredible traction almost overnight. The hashtag #ChocterSilverSqueeze was trending everywhere. People were posting pictures of their newly purchased silver bars and coins, creating a real sense of community and shared purpose. Silver dealers were overwhelmed. Websites crashed, and many ran out of stock completely. Premiums on physical silver, that's the amount you pay over the spot price, skyrocketed. It was chaotic, exciting, and for a moment, it felt like David was really taking on Goliath. The immediate impact on the market was dramatic. The spot price of silver jumped to an 8-year high, briefly touching over $30 an ounce. Mining stocks, especially those of smaller silver miners, saw their values soar. ETFs like SLV, which is a popular silver-backed exchange-traded fund, saw record inflows of cash. It seemed like the squeeze was working, and the excitement was palpable. The big question on everyone's mind was, could a decentralized group of internet investors actually break the back of the established financial system? However, the silver market is a completely different beast compared to a single stock like GameStop. We're talking about a global market worth trillions of dollars, with massive stockpiles of silver held by governments, banks, and industrial users. Squeezing a single company is one thing. Squeezing a global commodity is another level of difficulty entirely. The big banks and institutions that were the targets of the squeeze have incredibly deep pockets and sophisticated ways to manage their position. As the days turned into weeks, the initial momentum started to fade. The price of silver, after its dramatic spike, began to pull back. The big banks didn't seem to be panicking. The COMEX, which is the primary futures and options market for metals, didn't break. While the squeeze caused significant disruption and definitely put a spotlight on the physical market, it didn't trigger the cataclysmic price explosion that many had hoped for. The paper market, for the most part, held its ground. So, was the silver squeeze a failure? Well, it depends on how you look at it. If the only goal was to send the price of silver to $100 an ounce overnight, then yes, it fell short. The market structure proved too big and too resilient for even this massive, coordinated effort to break in the short term. It highlighted the immense challenge of trying to corner a global commodity market. But if you look at it from a different perspective, the silver squeeze was a huge success in other ways. First, it brought an incredible amount of attention to the silver market and the potential disconnect between the paper price and the physical reality. Millions of people who had never thought about silver as an investment started learning about it. It educated a new generation of investors about the history of money, the role of precious metals, and the complexities of our financial system. Second, it permanently changed the dynamic of the physical silver market. The demand from the squeeze absorbed a massive amount of available inventory, Even today, premiums on physical silver remain higher than they were before the squeeze, and dealers often have tighter inventory. It showed that there is a strong and dedicated base of buyers who value holding the actual metal in their hands, not just a paper claim. This has created a stronger floor for the physical market. The movement also created a powerful and lasting community. The Wall Street Silver subreddit, born from the squeeze, grew into a massive online hub with hundreds of thousands of members dedicated to silver. They continue to share research, stack their coins, and advocate for sound money principles. This community has become an influential voice in the precious metals space, keeping the conversation alive and continuing to apply pressure on the system. In the end, the great silver squeeze of 2021 wasn't the instant revolution some had hoped for, but it was a significant event that sent shockwaves through the financial world. It demonstrated the growing power of retail investors when they organize and act together. It exposed potential vulnerabilities in the commodity markets and ignited a global conversation about the true value of silver. It may not have been a knockout punch, but it was a powerful jab that left a lasting mark. The story of silver is far from over, and the legacy of the squeeze will likely be felt for many years to come. Thanks for watching, and if you enjoyed this breakdown, don't forget to like and subscribe for more deep dives into the world of finance.